India's long-drawn Lok Sabha elections will finally end on 1st of June. It's a Saturday, so stock markets will be closed for trading. Exit polls come later that evening, but even in the absence of hard data on which way voters may have exercised their franchisee, the mood on Dalal Street is quizzing. After hitting a lifetime high, breaching 23,000 points intraday on May 23rd, this entire week the stock market has slipped, and this on account of foreign investors turning net sellers. It's a sudden turn of events. In the last 2 weeks alone, bullish positions have been reversed. Foreign portfolio investors and foreign institutional investors are both cashing out. From over 2 lakh crore rupees as inflows in all of the last financial year, foreign investors have already sold more than 28,000 crore rupees in just the last 2 months of this financial year alone. The domestic institutional investors like mutual funds continue to buy, keeping markets from crashing, but that's another story. Investor nervousness is palpable in the equity market. So why exactly are foreign investors selling? Are they jittery about a BJP win, or are they apprehensive about the numbers that BJP could secure even in case of a win? Data from past elections suggests that investors like to book profits when they're unsure of the election outcome. Let's look at how Nifty 50 on counting day since 2004 general elections has fared. In 2004, Nifty slipped 12.2% on counting day as market wasn't factoring in a Congress-led UPA government to win. It took markets almost 6 months to recover. 5 years later, in 2009, Nifty jumped 17.7%. Some analysts point to India's swift recovery from the 2008 financial crisis, and India remained insulated from the US subprime crisis. Cut to 2014, the year Narendra Modi came to power in the centre for his first term. Nifty was up only 1.1%. A reason for this was that the stock market had already factored in a BJP win owing to the big Modi wave that had swept the country. Strangely, in 2019, when the BJP-led NDA government came to power for the second term, markets actually fell by almost a percentage point. Some analysts say that this was because investors who had bet on a BJP win quickly booked profits, and that led to the decline. So what's happening this time around? Market watchers say FIIs are booking profits even as brokerages are confident of a BJP win. But the devil is actually in the details. And there are 3 broad scenarios that brokerage firms will watch for and act upon. Scenario 1. If the BJP secures more than 303 seats as it did in the previous election, then that's going to result in a positive trigger and a mild rally for the markets. Scenario number 2. BJP wins more than 272 seats but less than 303 seats. This is likely to lead to disappointment and a sell-off in the Indian markets. And finally, what brokerages are calling the unlikely scenario, scenario number 3, that the BJP secures less than 272 seats. Expect heavy selling and low returns in all of 2024. Well, which way the markets will react on June 4th? We'll have to wait for the Election Commission to actually tell us. But remember, there is a Monday in between after the exit polls and before the counting day, and that could well spell volatility before actual counting.